Meanwhile, President Biden meeting right now with lawmakers to discuss ways to avoid a default on the debt ceiling. The meeting's underway. Let's bring in Dennis Lockhart, former Atlanta Fed president. Dennis, we're going to get some video from the president any moment, so I'll interrupt you. But this game of chicken that the White House and Congress are playing, how much danger for the market?
Danger for the economy and danger for the market. If it goes badly, we're in a stare down at the moment. I think what makes this a little different than 2011 and 2013 is the fragile hold on power that Speaker McCarthy has, and the chance of a mistake or an accident that no one intends, but we get to the X date and we are effectively in a default situation. So it's a grave situation that's building up here. And, I'm here in Atlanta, so I'm out in the provinces. I think there's a lot to be worried about.
So, Dennis, what is the risk, even if, and this is a scenario that I think is maybe more likely, the can gets kicked down the road at the last minute and the uncertainty for the economy gets extended? What are the ripple effects that investors should be concerned about?
Well, I think kicking the can down the road and continuing with the uncertainty and perhaps having...
Hold on, Dennis. Sorry, let's hear from what's happening at the White House right now. Here.
Excellent.
Folks, welcome. I'm sure that my colleagues and I will be saying things to you after this is all over. But in the meantime, just wanted to welcome you, let you know what we're doing. We're not going to take any questions now. We're going to get started. We're going to solve all the world's problems. Okay?
Mr. President, can you come into the other time? Mr. Speaker, are you willing to listen to the call? So much. Thank you so much. Thank you guys.
She was good. She got a clear shot, actually.
Dennis, they say they're not taking any questions, and then sometimes they take one, but he didn't. He just set the table, nothing to say. I mean, if we continue to get that, back to what you were saying, what's the danger if the can just gets kicked down the road and we don't get news on whether the debt ceiling is getting raised or not?
More volatility than is desired, of course. Uncertainty leads to volatility, and volatility overall is not good for the real economy. It makes it difficult for capital investors to plan. It makes it difficult for companies to take, let's say, bets on the future.
Well, in particular, what does it do to short-term rates at a time when we've had multiple rate hikes and we have a commercial real estate market that a lot of people are arguing is on the brink?
I think that's a good question. My sense of the Fed is that the Fed is focused on inflation, and they still have a lot of work to do to get inflation down, and will tend to, let's just say, compartmentalize their focus on the Fed and not factor in some of the uncertainty related to the fiscal side of things, which could mean, if inflation remains sticky, that we see higher rates. It could go that way.
At what point does the Fed have to start talking about the debt ceiling, even though the Fed wants no fingerprints on this issue? It's clearly something for Congress. Fed Chair Powell didn't even want to address the possibility of default or getting close to it. But once you get these ripples, does it become a broader economic issue that the Fed has to address with policy?
Yes, it becomes a broader economic issue. In my experience, fiscal matters get factored into the decision-making when it looks like they're going to affect the outcomes in the real economy, and particularly in the two mandated objectives of low inflation and maximum employment that the Fed has been given by Congress. So that's the equation. If it's going to begin to affect those two objectives, then it becomes part of the Fed's considerations, if you will. One of many considerations, but nonetheless an important one.
Well, another piece of an important consideration, we're due to get in the morning the inflation reading from CPI from a Fed that seems to perhaps want to pause rate hikes. How important is this number tomorrow?
It's important because it appears that inflation is declining, but gradually and not very rapidly. So if we see something that's consistent with that theme of gradual progress, then I think you still have question marks about the direction of policy.